Hello everyone. Today we discuss about fundamentals of accounting and today's chapter is accounting process. So business is an economic activity undertaken with the motive of earning profits and to maximize the wealth for the owners. Business cannot run in isolation. Largely, the business activity is carried out by people coming together with a purpose to serve a common cause. This team is often referred to as an organization, which could be in different forms such as sale proprietorship, partnership, body corporate, etc. The rule of business are based on general principles of trade, social values, and statutory framework also, encompassing national or international boundaries. While these variables could be different for different business, different countries, etc., the basic purpose is to add value to a product or service to satisfy customer demand. The business activities require resources which are limited and have multiple uses, primarily in terms of material, labor, machineries, factories, and other services. The success of business depends on how efficiently and effectively these resources are managed. Therefore, there is a need to ensure the businessman tracks the use of these resources. The resources are not free, and thus one must be careful to keep an eye on cost of acquiring them as well. As the basic purpose of business is to make profit, one must keep an ongoing track of the activities undertaken in course of business. Two basic questions would have to be answered. What is the result of business operations? This will be answered by finding out whether if has made profit or loss. What is the positions of the resources acquired and used for business purpose? How are these resources financed? Where the funds come from? The answer to these questions are to be found continuously, and the best way to find them is to be record all the business activities. Recording of business activities has to be done in a scientific manner so that they reveal correct outcome. The science of bookkeeping and accounting provides an effective solution. So if is a branch of social science, these study materials aims of giving a platform to the students to understand basic principles and concepts which can be applied accurately, measure performance of business. After studying the various chapters included herein, the student should be able to apply the principles, rules, conventions, and practices to different business situations like trading, manufacturing, or service. Now, the definition of accounting in brief. Definition by the American Institute of Certified Public Accountants, year 1961. Accounting is the art of recording, classifying and surrounding or summarizing, in a significant manner, and in terms of money, transactions and events which are in part of list and of a financial character, and interpreting the result thereof. Definition of the American Accounting Association, year 1966. The process of identifying, measuring, and communicating economic information to permit informed judgments and decisions by the users of accounting. Objectives of accounting: providing information to the users for rational decision making. The primary objectives of accounting is to provide useful information for decision making to stakeholders such as owners, management, creditors, investors, etc., and various outcomes of business activities such as cost, prices, sales, volume, value under ownership, return of investment, etc., are measured in the accounting process. All these accounting measurements are used by stakeholders, that is owner, investors, creditors, bankers, etc., in course of business operation. Hence accounting is identified as knowledge of business. Now, systematic recording of transactions to ensure reliability and precision for the accounting measurements. It is necessary to keep a systematic record of all financial transactions of a business enterprise, which is ensured by bookkeeping. These financial records are classified, summarized, and reposted in the form of accounting measurements to the users of accounting information, that is, stakeholders. Number 3, ascertainment of results of above transactions. Profit or loss is a core accounting measurement. It is measured by preparing profit and loss account for a particular period. Various other accounting measurements, such as different types of revenue, expenses, and revenue income, are considered for preparing these profit and loss account. Difference between these revenue income and revenue expenses is known as result of business transactions. Identifying as profit and loss, as these measure is used very frequently by stakeholders for rational decisions making. It has become the objective of accounting also. For example, Income Tax Act requires that every business should have an accounting system that can measure taxable income of business and also explain nature and source of every item reported in income tax return. Now, ascertain the financial position of business. Financial position is another care accounting measurement. Financial position is identified by preparing a statement of ownership, that is assets, and owing, that is liabilities of the business as on a certain date. This statement is popularly known as balance sheet. Various other accounting measurements, such as different types of assets and different types of liabilities, as existed of a particular date are considered for preparing the balance sheet. The statement may be used by various stakeholders for financing and investment decisions. Now, to know the solvency positions, balance sheet and profit and loss account prepared as above give useful information to stockholders regarding concerns potential to meet its obligations in the short run as well as in the long run. Now, function of accounting. The main functions of accounting now I am describing in details. Measurement first. Accounting measures past performance of the business entity and depicts its current financial position. Forecasting. Accounting helps in forecasting future performance and financial position of the enterprise using past data. Decision making. Accounting provides relevant information to the users of accounts to aid rational decision making. Comparison and evaluation. Accounting assesses performance achieved in relation to targets and disclose information regarding accounting policies and contingent liabilities which play an important role in predicting, comparing, and evaluating the financial results. Control. Accounting also identifies weaknesses of the operational system and provides feedbacks recording effectiveness of measures adopted to check such weaknesses. Government regulations and taxation. According to provides necessary information to the government to exercise control on die entity as well as in collection of tax revenues. Accounting classification. Accounting that is classified in three: financial accounting, cost accounting, management accounting. Financial accounting determining the financial results for the period and the state of affairs on the last day the accounting period. And stewardship accounting. Cost accounting information generation for controlling operations with a view to maximizing efficiency and profit. Management accounting to assist management in planning and decision making. Financial accounting, it is commonly termed as accounting. The American Institute of Certified Public Accountants and defines accounting as an art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in past at least of a financial character and interpreting the results thereof. Cost accounting, according to the Chartered Institute of Management Accountants, that is CIMA, cost accountancy is defined as application of costing and cost accounting principles, methods and techniques to the science, art and practice of cost control and the ascertainment of profitability as well as the presentation of information for the purpose of managerial decision making. Management accounting is concerned with the use of financial and cost accounting information to managers within organizations to provide them with the basis in making informed business decisions that would allow them to be better equipped in their management and control functions. Now, difference between management accounting and financial accounting. The significant difference between management accounting and financial accounting. Now I describe. Management accounting. Management accounting is primarily based on the data available from financial accounting. On the other hand, financial accounting is based on the monetary transactions of the enterprise. Management accounting, it provides necessary information to the management to assist them in a process of planning, controlling, performance, evaluation, and decision making. On the other hand, financial accounting, its main focus is on recording and classifying monetary transactions in the books of accounts and preparations of financial statements of the end of every accounting period. Management accounting reports prepared in management accounting are meant for management and as per management requirement. And financial accounting reports as per financial accounting are meant for the management as well as for the shareholders and creditors of the concern. Management accounting reports may contain both subjective and objective figure. Financial accounting reports should always be supported by relevant figures and it emphasizes on objectively of data. Now bookkeeping. As defined by Carter, bookkeeping is a science and art of correctly recording on books of accounts all those business transactions that result in transfer of money or money's worth. Bookkeeping is an actively concerned with recording and classifying financial data related to business operations in order of its occurrence. Bookkeeping is a mechanical task which involves collection of business financial information, identification of events and transactions with financial character, that is, economic transactions, measurement of economic transactions in terms of money, and recording financial effects of economic transactions in order of its occurrence also. Classifying effects of economic transactions, preparing organized statements known